Welcome back to the channel, everyone. This is Mo Investing, and we keep things short and sweet, so let's jump straight in. ASML is one of the companies with the strongest moats in the entire market right now. They are a company that specializes in building and selling lithography machines used to print intricate circuit designs onto silicon wafers, which creates billions of transistors. ASML's key products are their EUV machines, which they are the only company in the world right now capable of making EUV machines. They've also developed the next generation of EUV machines called High NA, which they do expect to be in production with some of their customers this year and in the coming years. Now, they do still generate revenue through the old lithography machines called DUV machines, and they do generate revenue as well from their install base, so servicing all of the machines that they have sold to their customers. Now, looking at some of the numbers, their market cap sits at 562 billion. Their PE, their trailing 12-month PE, I should say, is at 47. Their next 12 months is at 35, and their 2027 PE sits at 29 right now. Their price to sales is at 14. And then in terms of balance sheet, they have 9 billion in cash, almost 10 billion as of the latest quarter, and 3 billion in debt. So looking decent on the balance sheet there. In terms of ASML's moat, now if you've watched our last video, the moat remains exactly the same. Really, it stayed intact so far, and I don't think they'll face any disruption anytime soon. So their moat really consists of them being the only producers of EUV machines. They also control or have 90% market share in the lithography space. And then they've also developed the next generation, which we've already mentioned, called High NA of EUV machines. And then they also have Hyper NA, which is the generation after that in development, which is expected in the 2030s. So their moat really consists of them being the only developer of EUV machines. So it's a monopoly in the space. And then there's also, on top of that, the high switching costs. So since they're embedded with all the foundries and customers that they have right now, it'd be very difficult to displace them. Now, looking at their Q1 2026 report, they do come in a bit above expectations. So their total net sales was at 7.8 billion. Their gross margin was at 53%, and then their operating margin was at 36%. And then their EPS was at 7.15 euros, and their net income percent was 31.4% um, of sales. So in terms of outlook for 2026, they do raise their guidance. So they expect net sales to come somewhere in between 36 billion and 40 billion, and then gross margin to be between 51 and 53%. Now, looking at risks for ASML, I wouldn't consider them major risks, but they do still exist. So they have the China sales restrictions risk, which they have been restricted in their sales to China in the past. And based on this US bill that could pass, they could be further restricted as well, affecting their revenue from selling to China. And then there's the supply chain risks, as ASML does act as an assembler of many parts. Any disruption to the supply chain could affect them in their production of their lithography machines. Now, moving on to valuation, and we'll do our own estimates based on their guidance for 2030. Now, they do expect their revenue to come in between 44 billion and 60 billion euros in 2030. And I do expect AI to be quite a tailwind for them as well. So I'm going to assume that it's going to be in the higher range of that guidance. So I'll go with 55 billion euros. And translating that into dollars, that would be around $65 billion. So we'll use that as our revenue estimate. So $65 billion for revenue. Now, looking at their Q1 2026 net income percent, it was at 31.4%. And for 2030, I will go with 32%. We'll assume it's going to come in a bit higher. So 32% net income of their revenue would be 21 billion would be our estimate for 2030. Now, using their shares outstanding, which are at 388 million, we get an EPS estimate of $54. And if we plug that into a Kager calculator, that would be a 13% year on year growth from their current EPS. And then if we use that in our own DCF calculation, our first one here will be based on if their PE remains as it is right now. And we can see that the growth would be quite good, so almost doubling from their current stock price. And then what I realistically think for them is their EPS would be around 30. So if we plug that in, we can see that the growth wouldn't be that great. So only around 2% growth there, and around 1.6 K in stock price. So that would be my base case for ASML. So I don't expect much growth from the current price. Now, if I was to give ASML a rating, I would give it a rating of 5 based on their very strong moat. And then in terms of verdict, I would say it's currently in between a hold and a sell, but I'll give it a hold. I don't think there's much increase coming from the current stock price, but if it does dip significantly at any stage, I think ASML immediately becomes a buy based on their very strong moat. So that's it for the video today. Thank you for watching, and I hope you'll tune in for the next one.